So you clicked on this video because you would like to know how are NFTs taxed. I'm a CPA and I'm here to break it down for you in less than 15 minutes. Let's go. So NFTs can be a little bit tricky. Now they do carry a lot of properties as regular crypto, so when you swap them it's a capital gain and loss, but we're gonna get into one particular nuance today, which really is quite complicated to handle, and I'll show you exactly how you should approach it. But the scenario here behind me is that you purchased NFT 1 for using 1 ETH, and let's say at that time ETH was worth $3,500. I hope we get there again. Maybe some hopium there, but we'll see. So ETH was worth $3,500 at the time. We used 1 ETH to buy NFT 1. The ETH that we used had a cost basis of $3,000, so that's important for later. However, down the road, maybe a few weeks later, a few months, we swapped 1 NFT for 2 others. And this is something we actually see quite frequently. Oftentimes in crypto gaming, this is something that you can do. You can maybe stake an NFT and receive 2 others. So this is something that we see a lot, or even just a peer-to-peer trade where you trade 1 NFT and then you receive 2 other NFTs. Now this is where it gets a little bit tricky and what we're gonna get into, but let's say this NFT 2 was worth $5,000 and NFT 3 was worth $2,000. So let's get into how to calculate the tax and how this all works. So the purchase of NFT 1 is fairly simple and straightforward. This goes back to the swaps video that we've made, so if you haven't watched that, definitely check it out. But it's fairly straightforward. We have a $500 capital gain on the purchase of NFT 1. The reason for that is the ETH that we used had a cost basis of $3,000. I mentioned that would be important later. And it was worth $3,500 at the time that we used it, or that we purchased with it. And so that means we have a $500 capital gain on that purchase of NFT 1. Similarly, that means that the cost basis on NFT 1 is that $3,500. Okay, thing number 2 was we then swapped NFT 1 for NFT 2 and NFT 3. Now, NFT 2 was worth $5,000 at that time, and NFT 3 was worth $2,000. So if you're tracking along so far, we received overall, in total, $7,000 worth of consideration, and we are giving up $3,500 worth of cost basis. So overall, our capital gain is $3,500. But the IRS makes you report every transaction and every tax lot that is being sold and disposed. And so this means that we actually have to break this up on the 8949. So I added here a key factor. As I mentioned, overall, these two together is $7,000. So this means that NFT 2 accounts for 5/7 of the total consideration, and NFT 3 accounts for 2/7 of the total consideration. So when we get into the calculation, this is how you calculate the overall capital gain and loss. First, we take the proceeds, which is the fair value of what's being received. So in this case, $5,000 for NFT 2. We take the proceeds of NFT 2, which is $5,000, and we subtract out the cost basis that is allocated specifically to this piece of consideration. So we have $3,500 of cost basis that now needs to be allocated to the 2 different pieces of consideration. So the way that we will allocate that is based on these ratios here. So we take the total $3,500 worth of cost basis and we multiply it by 5/7 for NFT 2. So basically what that means, we take 3,500, multiply it by 5/7. That's the portion of cost basis that is being allocated from NFT 1 for NFT 2 for that part of the transaction. And so ultimately that results in $2,500 capital gain for the purchase of NFT 2. Okay, next, the same thing is done for NFT 3. So in total, it was worth $2,000 at the time, so proceeds is worth $2,000, and we need to subtract out the cost basis. We take the $3,500 from NFT 1, and we take the fraction of it, 2/7 of that total cost basis, to figure out how much cost basis is allocated to this part of the transaction. Then we will subtract the proceeds minus the cost basis, and we are left with the overall capital gain. And as you'll see here, when you add these up, $2,500 of capital gain on NFT 2, $1,000 of capital gain on NFT 3, that adds up to $3,500 overall capital gain, which is what I mentioned earlier, as this amounts to $7,000 total. So obviously this is a bit complicated. It's not as straightforward as you might think. And really this problem only comes up when you are swapping one NFT for another. Typically the bigger issue here is how the heck do we value these other NFTs? That is where it really becomes complicated, because if you don't know how to value those other two NFTs, who's to say what they're worth, and therefore who's to say what the capital gain or loss should be. But the IRS requires that you make a good faith effort at valuing that. And I suggest if you are going to come up with some value, you should have written reasoning for why you are making that value. If in the event of an audit, that is going to be absolutely essential in defending the number that was reported, because if you just make some number up and don't have any written reasoning for it, there's a strong likelihood that they will push back. So when you come up with these numbers, what NFT 2 is worth, what NFT 3 was worth, have written reasoning as to why you are valuing it as you are, and then that way, in the event of an audit, you will be protected. Now, the last thing I want to mention here is that sometimes people, and we see this quite frequently actually, sometimes people are not swapping one NFT for two, but rather 20 different NFTs. So this becomes a complete nightmare. We've had an instance where there was an NFT trader who had an $18 million NFT account. He was swapping like a Bored Ape and a CryptoPunk for 13 different NFTs, smaller NFTs, and we had to then go break down each piece of consideration, value them all, make sure that we were allocating the cost basis correctly. It was a whole ordeal, but it's very important that you do this so that when you report it on your 8949, all the numbers are correct, and in the event of an audit, his documents are bulletproof now, and there's going to be no pushback from the IRS. Completely understand that this is a bit overwhelming, especially if you are one of the people that are trading NFTs back and forth. I get it. If you don't want to handle all of this calculation and hassle, no worries. We are professionals. We do this professionally. So contact us if you'd like. We can take that off your plate. We're happy to do so. But really, this is how the IRS wants you to show it on your forms, and this is how it's calculated. I'm just a messenger here, so I'm just trying to let you know this is how it should be done. If you want help with that, we're here to help. And by the way, my name is Justin. I'm the head CPA at the crypto accounting firm CountonsheepYT, and we solely focus on crypto tax preparation. So if you work with TurboTax or a traditional tax preparer, that's perfect. That's where we come in. We handle just the crypto portion of it, filled out, ready to file, and then we pass that back to you so you can either plug it into TurboTax or hand it off to your tax preparer who might not necessarily know crypto like we do, and then you're good to go. And if you enjoyed today's crypto tax lesson, make sure to follow for more videos like this. And as you know, the crypto regulatory landscape is constantly evolving. So if you want help navigating the new guidance and strategizing around the new guidance, definitely follow for more. We are going to be releasing videos as news comes out, and we're going to be helping you navigate the new environment. So make sure to subscribe and turn on the bell notification for more.